Hello, traders, and happy first Monday of February. It's 8:02 a.m. Chicago time on the 1st of February 2021. It is the day of the Trade Right 30-day challenge for you guys at Convergent. The information was released. Let's get this challenge done. Let's see some changes on how you guys trade. I want to remind everyone that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1928. The market currently in a risk on sentiment. Some interesting things going on. Let's hop on over to the Convergent Trading pre-market summary sheet. Check out those silver futures. They actually have popped higher. They've gone as high as 11%. Silver happens to be getting the attention of Reddit crowd buying. I don't know what else to call it. It's being pushed. Has traded above $30. Silver above $30. Again, has been as high as 11% this morning, which is quite a bit for that metal. Gold is up 1%. Currently, the leaders, of course, silver. The Euro Stocks 50, the DAX are pushing up 1.29%, 1.19%. The numbers I'm rattling out may be different than what's shown in front of you because I'm looking at real time. What's in front of you is from about 10 minutes ago. The Nasdaq's up 1.04%. 1.04%. Nasdaq's up 134.5 points. Gold, as I said, up $17.20 or 0.93%. The laggard today is the euro, the Japanese yen, and the cable, with the bund falling 12 ticks. So you can see allocation is coming out of the other currencies into the dollar. The bonds and the 10-year notes are higher along with the treasuries, and the treasuries with the indices, and the indices are pushing higher. So it appears that we've found a temporary bottom in the equity indices. This morning, what is on deck? The U.S. stimulus negotiations continue. Silver roars with retail frenzy. Again, Reddit is giving this one some attention, just like they did for GME, which is really incredibly interesting. Except silver is a futures contract and it's a whole different animal. I hope these people know what they're doing. Futures are leveraged, and that's why we always say that trading futures is not suitable for all investors. It's because of that leverage. So hopefully these people don't get hurt or get hurt too badly. This morning, in terms of what's on deck for economic releases, we have the market manufacturing PMI at 945. That's the final number for January. Not quite the mover. ISM manufacturing PMI at 10. Construction spending, and then we get Fed's Bostic and Fed's Rosengren. So not a crazy morning in terms of releases. The overnight session shows that we've traded 372,000 contracts in the ES, which is quite high. We've been running quite high since the middle of last week, since last Wednesday. We've got 94.75 points of range. We have what looks like a short covering rally based on the profile shape. The inventory is positive, about 50% at this point, and the market is trending up. That's where we stand. Something to pay attention to here on Mondays: the rotations, the rotational values get updated, and the rotations have gone up quite a bit with the volatility recently. So just so you have some sort of reference as to what the market is doing in terms of rotational values and things like that, it is important to pay attention to that figure. let's switch over. Hang on, I'm just going to pull up my earnings. It's not coming up. Anyway, let's switch over and take a look at what was expected for Friday. The primary scenario for Friday, we were opening up around the 37.59 area. This is basically where we are now, or where we were. We went as high as 37.51-ish, I guess. What was the overnight high? 37.51 and a quarter, and have come off trading at 37.34 currently. The expectation on Friday is that we would likely push to 37.72 or so, and then we would be looking for large rotations down, and if that happens, we're looking for this thing to drop to 36.94. 36.94. I talked about this. This is the MC point of control. This is the main. This is the biggest test area that we have below us, and so it is the likely target. So shorts, as I talked about on Friday, shorts would want to hold this to at least retest 37.20, 37.30, and then beyond there we're looking at 37.08, I believe, and 37.02, and then 36.94, and it got there. Here's what actually happened on Friday. This is a 6-tick Renko. Friday opened up, pushed down immediately. I was looking for the mid VWAP to hold for a continuation, did not do so. Pushed through, pulled back to mid VWAP, and then squeezed through the low, the prior day's low, into 37.70. Then we finally get the big rotations down. We bust through the initial bounce, pull back right to it. You can see that initial bounce. I expected this to actually push through because it kept putting in higher lows with equal highs at the initial bounce low. That was a local week high with higher lows, so I was looking for that to break higher. What does it do? That's what it has, its largest rotation down, so I was completely wrong on that perspective, and then we end up squeezing all the way down to 36.88, with 36.94 being the key value down here. So we push the 36.88, pull back, we extend the move, and then consolidate for quite some time. Another heavily contested profile on Friday, with the point of control shifting down to 37.04. So quite a bit of selling on Friday. Quite a bit of selling on Friday to hold near the lows. It definitely is, as I talked about last week. Once we broke lower, it's going to be harder for these buyers to bring it back up to the 38.45 area. So we'll see how we do today. But Friday was definitely a selling day. Did not get much traction on the buy side. Even the return from the low got us back to the IB. The initial balance around 37.35. And couldn't push through. So to me, the rotations were clearly, except for a couple of pieces here and there, the rotations were clearly to the downside for most of the day. The overnight session, so here we open in a small gap. This is where we closed on Friday. This is where we opened last night. We open on a small gap. We push all the way down to 36.56 and then start to turn up, and it's been trending up ever since. So this thing has been pushing higher and higher and higher throughout the overnight session. It brings us back into the prior day's range. We don't really have value on Friday, in my opinion. This profile does not really show consensus. It shows that there's some pretty active price discovery on both sides. So, this is the full session profile, and you can see that it's really nondescript. It's got a lot of volume throughout its range. And so the price discovery, the active price discovery continues. The active price discovery continues, and I expect today's session to also carry the volatility forward. As we saw in the overnight session, as we're seeing 377,000 contracts with almost 100 points of range. So this is likely to continue moving forward. So volatility continues to be higher, which means for you and me, size needs to drop, or we need to widen our stops and targets. We cannot continue to trade with the same kind of stop, of course, unless you're scalping or starting with scalps. It's hard to maintain the same size stops for structured trades and higher volatility. So that's what we've got so far. So let's switch gears here and look at what we've done in the bigger picture. So for that, we pull up our RTH only composite chart. This is a chart that has all the data going back to 2015. So this profile here goes back to 2015, and we could see what has happened here recently. The alternating gray and black is the month, is the start of the month and the finish of the month. So today we'll start a black box, and then each one of these boxes represents a week. So we can quickly see what's happened in the day, in the week, in the month. And not only that, we can see what happened within the week in terms of volume at price or profile, the volume profile. So what happened last week? This is where that 38.45 comes from. Once we had this day here, I started talking about the likely struggle for buyers to push back up there. We have basically put in new highs, new all-time highs, and we were not able to maintain this 38.45 area, and we had a pretty wide gap. Then Thursday came in and tested that gap mid before putting in an excess high, and so the expectation is it's likely to continue down and test this low. If you recall, I talked about that low from Wednesday to be tested on Friday. That low was 37.0650. And if it breaks, if it's unable to get into the prior day's range, then the goal is likely to be this black line, which is the MC point of control, for this profile, which encompasses this whole area here. So let's shift that profile forward to include everything, and you can see very clearly where the 36.94 comes from. We tested through it, pulled back above it, and finished above 3,700 on Friday, and we're sitting here despite the rally overnight, 100-point rally overnight, we're still sitting basically at the mid of Friday's trading. So likely to have a fight this morning, in both directions. In either case, we're one-time framing down. What we had last week is the week before, which was a short week because of Martin Luther King Day on Monday. We opened on top of the point of control. We put in a high, a new all-time high. So we took out the prior week's high of 53 and we went to 62.25, and then we put in a low, and we finished near the low of that week. We finished near the low of that week. This is a bearish engulfing week here. And so we need to pay attention to how well the market makes it through the midpoint of this week. The midpoint of this week happens to be the low of last Monday in that 37.88, 37.85 area. And that's where basically the 20 SMA is. So to me, we just need to see how well this thing kind of makes its way through. Does it breach the high and end the one-time framing down, which is now in play? The one-time framing up, which we've had for the last 3 weeks, 1, 2, three higher lows, that gives us a weekly uptrend, has been broken last week. We broke that last Wednesday. And so now the market has shifted from up to neutral. And then the question becomes, do we go, is this just a standard pullback for new highs? Or is this shift neutral, lower high, and then start to move down and clean up, basically go down to the 35.48 and whatever the balance areas are below. So the question is today is, do we get sellers that come in and bring it back to 36.94 and it hangs out near the lows? If so, then tomorrow we expect to continue to push down to 36.50, which we pretty much tested overnight. And if we do, then we look for 36, 24, 25. This area was quite important way back in December, and we are likely to test that next to the downside. Okay, pretty good volume, pretty good range on Friday to the downside. Okay, so let's take a look at what's expected for today. Just setting up the chart here. Come on. Computer's choking a little bit. Okay, stock zones. Okay, so here's what we're looking at for today. We have left the mid and VWAP well below us. We are above Friday's mid, which is this line right here. That's from Friday. Friday's mid. The inventory is slightly long. The expectation this morning is an open auction in range, responsive, looking forward to push down into this 37.28 and potentially 37.18. So we're looking for 28 here, 28.18, and I'm looking for it to find a base in this and then to start pushing back up to break the overnight high. This 37.50 area is expected to be a struggle. If it breaks through, the key target above is 37.74.75. So the 74.75 comes back into play. If you look at your charts, if you pull up like a 60-minute RTH chart, you'll see 74.75 has been in play for quite some time. We messed around with it on Friday in the overnight session, and we closed around it on Thursday. So this is the expectation. I'm looking for momentum to continue higher. If so, we breach the prior high and we go into neutral. This gives the buyers a chance to push tomorrow for higher prices. Otherwise, the expectation is an open auction that attempts to push higher. It might get into the overnight high, but look for an impulse. Look for sellers to step in at some point once prices get exhausted to the upside, back to 18, and then we are likely to take a ride down to 37 to the prior day's point of control, which is 37.05, which happens to be the full session mid right down here, and then we're likely to migrate to and test the prior low, 36.85, but I'm expecting it to get entangled in this 94 area once again. That's scenario 2. Not expecting a runner today. Mondays rarely are a runner, although I was wrong the last time this happened. Mondays generally are digestion kind of churning type of days. I hope that makes sense to you. Good luck today, and I'll catch you tomorrow. Again, Convergent Trading members, do the 30-day challenge. It starts today. You've got a whole bunch of exercises, drills, things like that to do. The goal here is to make sure that you identify your errors and your issues. You address them so you can be a better trader. Good luck, and I'll catch you tomorrow morning. Take care.